Hey, it's Darcy from the NZ Everyday Investor. If you only knew then what you know now, right? We're all blissfully ignorant in some areas, and purchasing your first home is absolutely no exception to this general rule of thumb. You really have no idea about what you know nothing about yet, or something kind of like that. So today I'm having a discussion here with mortgage advisor Alex Matheson around some of the things that home buyers would do well to understand now before they fall into some of the common traps. Now, I'm talking to Alex today because mortgage advisors actually have a pretty good perspective on the entire process of buying a home from end to end, not just the finance. So you may purchase a few properties over your life, but these guys, they actually literally walk through thousands of them. Now, before we begin, I'd like to share a few things that I personally remember learning along the way to purchasing our first home. Who knows, it may be of value to you or someone else that you know that maybe is house hunting right now. Now, on that, if you like today's show, can I ask you a favor, please? Can you please give it a like and give it a subscribe also? That really helps get the show out there a bit more. So the first thing that I remember learning when we bought our first home, number one, conservatism. That's hard to say sometimes. Conservatism is expensive, and oddly, it's actually quite a risky strategy to employ with property, perhaps in other areas as well. My wife and I could not have purchased for much more, but we could have paid a bit more for a slightly larger home. We now live in a home that's probably worth twice as much, I guess, as what that first home is currently worth. But that twice as much figure is significantly larger now than what it was back then. Contrary to what you may feel is the smartest thing to do, and maybe even what you've been told, if you can, now is the time to push the boat out, like today, not later on. Now, number two, you can change the home, but you can't really change the location. We bought in an awesome area when we bought our first home. Really thankful that we did that. And even though it was small, the lifestyle sacrifices we made turned into more of a financial gain later on. It really set us up well. Now, there's two reasons why purchasing a home is a good idea. It's a place to live in, that's got to be a good thing, but it can also build wealth. The dwelling on the surface is for your lifestyle, but the land beneath is for your wealth. So, number three, you don't make money off renovations, you make money off land appreciation. One of the craziest myths out there is that you can climb up a so-called property ladder by doing renovations on your home. Homeowners, generally, who do renovations, take credit for something that the land actually is doing on its own. Now, of course, there's exceptions to this rule, but only a few, I think. Number four, if you can, you should purchase tomorrow's home at today's price. Now, what do I mean by that? Assuming all property grows at the same rate, at the same growth rate over time, the home that has the highest value at the start will be worth far more in the end. Common sense, right? Yet many home buyers who can actually afford to do more end up doing less, possibly because they're being conservative. Instead of purchasing at today's price the home that will last for the long term, they buy smaller and run the gauntlet of selling and buying in a rising market later on. Ultimately, they end up paying more for the property that they could have owned ages ago. Okay, the fifth one. Now, property prices don't matter. That's right. So hear me out, because I know some of you are just screaming, what? Let's say that you bought a $200,000 home back in 1990. That may have cost around $575 per week in mortgage payments back then, assuming 18% interest rates and that you borrowed, say, 80% of that purchase price. That property today, assuming a growth rate of 7% on average over a 30-year period, would be worth about $1.6 million today. The mortgage payments at today's interest rates, in 1990's dollars though, is closer to $620 a week. The actual cost of home ownership isn't the purchase price, or it's not even the loan amount. It's the loan repayment. Under this example that I gave you before, with all those numbers, the payments are actually only 8% more than what they were back in 1990. So to quote the Reserve Bank governor recently in New Zealand, house prices sell newspapers. So, there you go. That's it from me. Now, hopefully you enjoyed that sustained intro, and that was just an intro. As usual, before we start, I'd like to thank a couple of partners to the NZ Everyday Investor. The first is Hatch. Now, if you want to invest in the share market but you don't know where to start, well, Hatch is actually a really good place to start. Check out the link in the description, and if you set up a new account, you pop $100 in there, they'll throw in another 20, just like that. The link is in the description or in the notes of this video to find out more. Let's make a start. So we've been talking kind of like from a lending or from a banking perspective.
Yeah.
When it comes to some of the personal stuff that happens, what are some of the biggest pitfalls that you see from maybe it's pre-children people who are buying their first home? What are some of the kind of challenges that you see or the mistakes that people make when they're making decisions about buying their first home?
You're not necessarily considering that you are starting to plan to have a family.
Yeah.
And you may end up buying a house that's possibly too small. How long are you intending to be in that property in the area? Is it just a stepping stone? Are you just wanting to get on the ladder and which is what we ended up doing,
Right.
me and my partner.
Yeah.
We ended up purchasing a small 2-bedroom brick and tile unit.
Cool.
It was within our price bracket. That was what we were approved up to at the time.
Yeah.
And we all day long knew that we were only going to be in there for a short period of time.
Right.
So one of the tips I can sort of share: don't dive in and renovate the house if you're only intending to live in it for a short period of time.
Do you still live in that?
No.
No?
So
Okay.
so we ended up having our first kid, realizing that the property was going to be too small.
Yeah.
So it was something I've learned along the way that possibly we should have looked for a bigger property from the get-go.
Yeah.
But so we ended
Well, we have
up,
a lot of common actually, because it's exactly the same thing that we did.
Oh,
Bought
really?
a
Okay.
2-bedroom brick and tile unit for our first home.
Yeah. Okay.
But I wish
Yeah.
I would have bought the place right across the fence, which was
Correct.
twice as much back then, but it's
Yeah.
probably 3 times as much now.
Yeah, definitely. Yeah, and I wish at the same time I was able to actually possibly keep the property. But it was sort of it was a stepping stone. It was a little bit run down. We probably could have lived in it as it was.
Yeah.
We definitely could have spent less on the improvements we did to the property.
Right.
Which, while we put in the new carpet, we tidied the kitchen up, the bathroom up.
Yeah.
But then when it came to the point of selling,
Yeah.
that actually affected the profit that we made from the property.
Right.
The market was different; it wasn't booming as it is now, and so if we factor in the renos, the agents, the amount of profit we made was minimal.
Right. Interesting.
Where it would have been better if we had have just lived in the property,
Yeah.
got used to it.
Yeah.
That's another thing. We didn't actually move in. We dived straight into ripping it apart.
Right. Okay.
Thinking, oh no, it's run down. We want to tidy it up.
Yeah.
Yeah, so having a bit of a plan in place for what you want to do, where you want to live, the type of property.
Yeah.
Even considering with a cross lease that you are on a shared bit of land. Who are the neighbours? Are they owners? Are they tenants? Having a little bit of a look around the area can really help.
Yeah.
You decide whether or not you want to live in that area.
Yeah. Yeah.
It's really
which is
important.
interesting. Like it's quite cool to hear you say though that you made similar mistakes
Yeah.
that I made myself. Experiences we'll call it. Yeah. So we didn't buy big enough.
Yep.
We launched straight into renovations as well. It's almost like a rite of passage.
Yeah, you want to make it your own. And
Totally.
Yep.
Only to realize that, hey, there's 2 possibilities. You're either going to sell it, and any gains that you get from the sale will be because the land is appreciated.
Yep.
And if anything, you've probably actually reduced the price by putting your pink tiles all over the walls.
Yep.
But then the other piece is just realizing that not buying big enough fast enough is actually a form of conservatism, and conservatism is ultimately very expensive.
Yep.
And you pay for it when you sell it, and then you pay even more for the property that you should have bought originally, if you could have, right? Like, I don't think when we were in actually the position to buy our first, I don't think we actually could have gone any bigger. I don't know about
we
you,
were.
but
Yeah, we were sort of at the limit as well.
Yeah. Whereas today, I see quite a few people that they could do a lot more, but they don't.
Yeah.
Because they think they're being safe, but in reality, perversely, it's actually a very risky strategy being safe.
Definitely. Like even sometimes buying on the outskirts. We have this every now and then, but buying on the outskirts, hoping that the property is going to go up in value, so you are able to cash up and take your profit, to then buy it back into the area that you grew up in, that you want to live in.
Yeah.
But you then find out that the area that you wanted to live in has actually gone up significantly more than the area that you've initially purchased in. So while your deposit has gone up,
Yes.
hasn't gone up fast enough.
Correct.
So you're buying in the same area that you chose to live
and
in.
Inflation
in a
causes
way.
distortions.
Yeah.
And that's the thing, right? Like I always imagine as a pebble being dropped in the pond.
Yep.
It always, the big impact the closer you are to the city in terms of, so capital gains will generally, not always, generally increase at a faster rate around the city fringe, and then there's a bit more volatility in terms of price movements the further out you get.
Yeah.
But it's a very difficult strategy to buy in an up-and-coming area with an intention to go into an already good area.
Correct.
That's a trap, right? So that's another good one.
Yeah, and sometimes it can work out well. The area that you buy in could actually possibly take off, and you go, great.
Yeah, but it's speculative, or it's less guaranteed, right?
Yeah, we don't know when. And if it's only a short-term thing, if it was, or if, like you said, if you have the capacity, maybe it is better to, rather than being conservative. If you do want to live in the area that you can afford, why in some way settle for less?
Correct.
Yeah. We often see as well, sometimes from that affordability piece, people sometimes have the capacity to actually borrow more money, but don't want to because the numbers are much bigger now. And going, well, no, I don't want to have a loan this big, because we're worried if rates one day rise, or where this is the new normal now. House prices have gone up. Interest rates are at historically low levels. So in some ways, as much as it can be a bit scary, at the same time, your first home may be starting in the millions.
And it's
as
scary, right?
as it sounds. Yeah, it sounds crazy saying
and
that,
we're all kind of in this zone where the cheaper money gets, the more it inflates asset prices, the larger our loan amounts become.
Correct. Yeah.
But what it always comes back down to, full circle, is that it's actually cheaper to service that debt. So it might be $1 million today, but it's at 2.5%. It might have been $100,000 40 years ago when your parents had their experience, but it was 22%. So, in terms of what we should be looking at, should we be looking at the purchase price, the loan amount? I actually think we should be looking at the loan repayment, right?
Yeah,
and as a
that's
function
what I like
of
to look at.
Yeah, and I think that's quite freeing for a lot of people when they look at it like that. Yes, there's risks. You're more sensitive to interest rate movements. But if you've factored in the likelihood and the magnitude of what that risk is, maybe it's still reasonable to proceed. But it's kind of like the game that we have to play these days, isn't it?
Definitely. And it's in some ways, if you're ready to buy, you're buying in the market that the time that you're buying in. So when I bought, the rates were higher. The house prices were cheaper, and waiting for the house prices to possibly come back, in my view, is a bit of a bad strategy, because who knows when that is going to happen. And will you be buying in a downturn? That's right. Most people tend not to.
That's right.
How much lower is it going to get?
So people kind of shy away from it. And I remember seeing this back in, probably showing my age, whenever someone says back in my day, it's going to be a long conversation, slightly outdated, but...
How old are you?
Pretty old, man. So 17 years ago, when I first got into it, it was post 9/11, and they're in New Zealand anyway. Shortly afterwards, there was a bit of a housing boom, and people were buying properties and then doubling value within 2 years, and then once they got out, waiting, because the market has risen so fast, so sharply, it's going to pull back.
They've now got all this additional capital.
They go renting. They wait for the market to pull back, thinking they're being pretty clever with this strategy. Not realizing that property isn't necessarily the same asset class as equities. You can't really do technical analysis that well and trade too well with property in terms of short-term movements. But and they haven't never gotten back in. So I know clients of mine that have been renting for almost decades, trying to get the timing right again. They missed out, and they slowly come back around and just swallow their pride and get back in the market. They should have stayed, right? But
correct.
So timing versus time in, right? It's that old age-old thing, isn't it?
Correct. And if you're ready to buy now for your first time, if you're ready to upgrade, if you're ready to sell, then
the best timing is now.
Exactly. You find the next house, and you're buying in the same market. If you're selling and buying in the same market, it is. Okay,
so we've covered a lot of ground. We've covered how to present yourself to a bank, the different ways that we could approach the bank. What does it mean to get a pre-approval? What's the next step beyond getting approval? The importance of house insurance, the importance of getting legal advice.
Thinking about the broader things, like what's happening in your micro environment world. Like, are you going to be having kids, changing jobs, blah, blah, blah.
Yep.
We've covered a lot of ground, actually.
Yeah.
The last thing I think we probably should talk about is insurance, but not house insurance, personal insurance, because it's one of those unsexy kind of topics where usually you've blown all your money on the valuation reports, the building reports, the legal fees, you've moved in, you bought a whole bunch of furniture. The last thing you want to do is pay another couple $100 a month for life insurance or personal insurance to protect you from the negative aspects of having a mortgage.
If something goes wrong.
Yeah. Do you like you've I think you've been in the industry for about 6 years or so.
6 or so years now. Yeah.
And so look, I know I see this quite frequently, probably too many times a year, at least once a month, where there's some sort of health event that I hear about, which causes people to make a claim on their personal insurance plan for some reason.
Yeah.
Have you seen stuff like this before, where people kind of don't factor it in and then have a bit of a problem?
Yeah, yep, definitely. We've had people that have called up and said, what do I do now? We've had to look into top-ups against the security, the house, to pay for that medical event, which is not ideal, especially when there is insurance that is available and often affordable. Yeah. So we do build that into the actual repayment guide that we give customers. Yeah. We'll often go over the actual everything, and when we're doing the expenses going forward, I will factor in some form of personal insurances. Yeah. And hopefully there's still a surplus left over. Yeah. And going, well, hey, look, it does look like you could get it. It's not a requirement of the bank, but it's definitely something that you should consider going forward.
So tell me about that, because it's not a requirement of the bank. That might surprise some people to learn, because they probably would have heard that, you need to get some
insurance,
right?
Yeah, got to get house insurance. Misinterpret it that I've got to get insurance. Yeah. Walk into the bank and you sign up for everything. You get ring fenced. Yeah. You're trapped at the bank.
Which means you have no options?
Yeah, no options, can't leave, or you're too scared to leave. You've got your house insurance, mortgage there, home loan there, KiwiSaver. Yep. It is definitely worth sitting down with an insurance advisor to go over what you may or may not need. Yeah. And you may find that it is actually affordable, but it's definitely, as a pitfall, it's the last thing I want to hear is one of my customers ring up and say, I decided not to take out personal insurance because of we didn't think we could afford it. Yeah. We figured we were young, fit, we were healthy. Yes. We took the risk. Yeah. But now something has happened. Yeah. And now we're really worried that we're not going to be able to afford the actual home loan. Yes. Because I'm going to have to go off work. Correct. I'm in hospital. Yeah.
Or you're dead.
Yeah, and that's the worst.
And that's hard when you leave somebody else behind who isn't dead, and there's no money to offset the mortgage that you also left behind. Yeah. And it's something that I've been doing for a long time. The insurance in terms of in my business, I do directly do it.
Yes, you do the insurance, right? Yeah.
Yeah, and it's something that I find quite important because it's completely different. Yeah. But it's the same problem, but it's the other side of the coin. The mortgage builds the wealth, the insurance protects the wealth that you're trying to build. So one is leverage, the other one is a deleveraging tool. Yeah. And it's, because I remember the very first experience I had with this before I was even involved with insurance was with a couple, and I was following up to talk about their mortgage, and then I think it was actually the mum answered the phone. Oh, you haven't heard, she passed away. Yeah. Brain hemorrhage or something like that, and she would have only been maybe 25 years old, right? Oh, far, yeah. But it was a mess because there was no personal insurance left behind, and I think that was probably one of the reasons why I decided to get into it and start to move more into that space. But it's so easy to kind of push that aside and treat that as an optional extra, and think, well, I don't want to waste my money on that. I was actually just talking to some people a couple of days ago where the idea was that they wouldn't, on purpose, take out new life insurance, and they would save the money instead to self-insure. Yeah. And that was a decision they made about 12 years ago. When I asked them how much have they saved as a result of not paying those premiums, the answer was nothing. We never actually did that because you don't.
Yeah, we see that all the time. Savings accounts that are set up for a specific thing, but it's very easy to dip into your savings. Yeah. It's not easy to dip into your insurance, into your KiwiSaver. Things that are designed to sort of help look after your retirement, look
Yeah.
after your wealth, protect you.
It's common sense, but I also understand, no one likes paying money for something that's intangible. They can't see it.
I'm the first to put up my hand and tell my clients that I didn't have insurance for about 2 or 3 years when we had the home loan, because I did think, as everyone does, young, I don't need it. But as I started to do this job more and more, and hearing some of the war stories, and even having some of my own customers ringing up, that's when I started to realize the true importance of the actual personal insurance as well.
Yeah.
And I think now I'm probably overinsured, but
Well,
it's time for
we'll have a chat about that,
review.
shall we?
Need a review.
But that's the thing, right? Like if you are listening to and you're thinking, right, I'm going to buy a home at some stage, and you're doing your budget to figure out whether you can afford the mortgage payments, then we didn't really sort of touch on this, but there's probably another at least $300 or $400 a month in extra expenses that you're going to have just as being a homeowner.
Correct.
But there should also be an allowance towards personal insurance as well.
It almost should be like car. It's crazy that car insurance is not mandatory.
I know. Yeah.
It's crazy that the personal insurance isn't actually mandatory.
Yeah. It's highly recommended, but I guess then insurance companies banks would be indirectly assessing people's ability to borrow based on their health, right?
Yeah.
So it's a bit awkward. But it's a strong recommendation that the banks would have. They're in an awkward position in making it because in many cases they also sell insurance, so it can kind of be seen as a bit of a conflict of interest. But I think either way, if there was like an amount, let's call it somewhere between 2 to 4% of your gross income that you were putting aside to take care of all of your personal insurances, including medical and life insurance, include that in your budget. It's just something that you regardless of whether you actually are going to implement it or not, include it in your budget and make your decision, because you shouldn't be. It's like eating icing all the time rather than the cake, right?
Correct.
Right? I'm trying to struggle to remember the lyrics of that Pink Floyd song, but you do have to eat the cake before you get the icing. That's what I'm going to say. So don't just try and chase the capital gains on your next home purchase. You got to do the right thing as well, right?
Yeah. Look after yourself.
Yeah, but now if people do want to reach out to you, Alex, what's the best way for them to get in contact? Let's say they're a first-home buyer, they're a next-home buyer, they want to chat to a mortgage advisor rather than dealing with their bank. What's the best way for them to get in contact with you?
So anyone's welcome to just give me a call on my cell phone, my work phone.
Yeah. Cool.
Give
it away, man. Give it away. Why not?
Which is 021 022 16942. A nice long one. Email address is just first and last name, Alex, Alex .Matheson, Matheson, at loanmarket.co.nz.
Fantastic.
Awesome.
Just rolls off the tongue, doesn't it?
It does, yeah.
That's awesome. Well, I really appreciate the time that you've taken to come in and to explain that. I know that for a lot of people, like there's a lot of content out there to help first-home buyers, right?
Yeah.
But and sometimes people will kind of gravitate towards one personality versus the other. Hey, welcome to our industry, right? We're full of different people. So if people do want to reach out to you and catch up and make a start with you, then I would totally recommend it, because having somebody who's on your side when you're doing something like this is actually really important. So.
It's like having a good coach, right?
Totally.
Good coach, gets results,
yeah,
wins games.
Cool. All right. Well, thank you very much again, and we'll catch you next time.
Awesome.
All right.
Cheers.
Awesome. Thank you very much, Alex Matheson. Hope you enjoyed that. Now, if there's a property-related question that you have, now it could be around hunting for your first home, your second home, hunting for your first investment property, how to structure your debt, whatever it is, please let me know in the comment section, and I'll have a look at it, try to respond to you, or even make another video on it. Now, before you go, did you know there's a few other videos that I've done with various other people all about property from all sorts of different angles? A box will come up soon, and if you like, feel free to check them out. Now, that's it from me today. Hope you have a great day, and we'll see you next time.